Hello and welcome to another Sunday analysis video. Last week I was not able to make a Sunday analysis video because I went somewhere and I never had my laptop with me. Sorry for the inconvenience we might have caused. I will make sure that this will not repeat itself. So without wasting any time, let's get into this week's analysis. So on the previous week we were here. That was the analysis on the 12th of March, the analysis that I posted on the 12th of March. I was expecting price to come lower and find support at 0.6500, but instead we've found support at 0.6600. And as you can see, if we look back to previous price, we had support here also. So like I said, the levels repeat themselves. It's just a matter of you anticipating the levels price will come to bounce off of. So we found support at this previous level here, this previous significant level here, and price began to go up. So I was expecting price to find resistance at 0.6700 because of this last lower high here. And if we bring out our Fibonacci, this is the 61.8, which is our golden ratio. So the price eventually came to find resistance here. We tapped here, created this pin bar here, but I always wait for price to fully go into the zone and then begin to form its reversal candles. So price went into the zone, formed this pin bar here, and we started shooting down. But again, price came to find support at 0.660 and began to shoot up. So here price was struggling to break this level 0.6700, but eventually it found resistance, then came down to find support at 0.6650 and then broke this previous high here. After breaking the previous high, the bias changed and now we began a bullish trend. And now we have begun a bullish trend in my case. So as you can see, I waited for this retracement to come here. I marked this level when I was waiting for this particular retracement to come here, because on the other pairs, like the gold pair, we'll get into that in a second. On gold, we already started the bullish run. So on Aussie dollar, I was expecting the bullish run to also continue. I was expecting the bullish run to also come in the Aussie dollar. So I marked out this level when this retracement was developing, but we never fully came into this level here. We went up, created another high, then now price has now come to retest this level 0.6650. So when price opens on Monday, I'm expecting an impulsive move upwards. So let us look at our target levels. So my target level will be 0.6800. So before we can be sure that price will go upwards, I'll wait for more confirmation to enter the trade, like moving average crossover and a bullish reversal candle. That will help me confirm that our trade is valid. So keep in mind for the target level 0.6800 and our support level 0.6650. As price develops, I'll give an update in our Telegram channel. So if you haven't joined it, make sure to join it. From the Aussie dollar, we go down to gold. So for gold, in the previous video, I was expecting price to find resistance here, but as you can see, we continued with our bullish run here. he even broke our monthly significant level 1900. After it broke this significant level here, it retested the level and began to shoot up. I entered the trade here, but I was stopped out because I put my stop loss at 1890. So I entered the trade at this candle here, at these candles here, these bullish candles here, and put my stop loss at 1890. But price eventually came to stop me out and continued going upwards. I couldn't enter the trade anymore because I wasn't looking at the charts at that particular time. But after I was stopped out, price continued its bullish run. So as you can see, this is where I got the confirmation for the bullish reversal on the Aussie dollar, because gold was already on a bullish run. In the previous video, I expected the daily candle to close below 1860, but it did not. It continued going, price continued rallying upwards, and price eventually slowed down at 2000. So price eventually slowed down at 2000, retraced for some time, found support at these weak rejections here, found support at this weak rejection here, and then continued to go upwards and has now formed a double top. So for gold, we might see price still staying above our moving averages here, or we might see price retracing back to our 61.8 Fibonacci retracement level here, which is also aligning with this previous high here. So as you can see, we have our previous high here, which is at 1960. So let's anticipate. So I'm anticipating price to either find support at this moving average level here, and come down to 1960, where to find support and break the 2000 level, and maybe come to 220 here. So let us see how price develops. Make sure if you enter any trades, you use good risk management so that you do not end up blowing your account and messing up your psychology. Then we go down to Euro USD. Okay, for Euro USD, we were here last week, where I was expecting price to find resistance at this level here. As you can see, we have our significant levels here, where I took this trade and I got out of the trade here. Then price retraced back, and I was expecting price to find resistance at this exact level here and continue to push downwards and find support at 1.0450, but it did not do that. Eventually it broke this previous high here. So after it broke this high, my bias became bullish. This is why my bias on the Aussie dollar also changed. So we had bullish confirmation from gold, from the Euro USD also. So after it broke this previous high, we found resistance at 1.076. After we found resistance at 1.076, we declined sharply, but I was expecting price to stay above this last low here. I expected price to stay above this last low here, and eventually we came to find support here. After we found support, we began to rally upwards. As you can see, I entered my trade here. As you can see, I entered my trade here because of these bullish candles that we have here. I expected price to continue with its bullish trend upwards. So I entered the trade. Good trade. Came out with over 130 pips. 170 pips actually. Came out with 170 pips. With the smallest lot size, that's like $17. With the standard lot size, that's $1,700. So a good trade, if you ask me. Now the market found resistance at 1.0900 and began to retrace. So now we may move our ellipse to and drag it to the top here, showing that we have made a new high. So after we make a new high, we always expect price to retrace and to retrace to a specific Fibonacci level and a significant level. So we have our last high here. We also have our 50% Fibonacci level there. Let me just remove my position size calculator. I just wanted to show you the position size calculator because of the trade I took. So now we have come to our previous high here and we have created this pin bar here. So let us see how price develops on Monday. If price forms a bullish engulfing candle and gives me other confirmations to enter the trade, I will make an update in the Telegram channel to keep you updated. So let us see how price develops. If it doesn't find support here, it may even come down to find support at the 61.8 level because it is also aligning with these previous resistance levels here that we had. So let us see how price develops. And yeah, but due to the news that the banks are collapsing, I am seeing more weakness to the dollar coming. The dollar is having weakness, so we might see prices going higher on our we may see prices going higher on the pairs that we trade. So keep in mind that the dollar is finding weakness because of the banks collapsing. We saw the Silicon Valley Bank collapse and some other bank, I'm not really sure. This is the first bank, this is the second bank actually to collapse in a very long time. So this may bring some worry to investors who really believe in the dollar. So we might see some weakness in the dollar, and the pairs that we trade may continue to rise. So I'll make sure to keep you updated in the Telegram channel. So make sure you subscribe. From the euro, we go down to US30. US30 the previous week, we were here, and I was expecting price to come down to 31,200. I was expecting price to come down to 31,200 from this level here, from this shooting star here. Shooting star, pin bar, you can call it anything. So came here, found support, came back to retest our level, came lower and found our last low at 31,503. Then from there we began to range. We were not really sure of where price was going. We were just stuck in a range, but eventually we broke out of the range here, breaking this last high here, proving to us that we are now in a bullish trend. We have confirmation that we have changed from a bearish trend to a bullish trend. So yesterday I was expecting price to come find support at this exact level here because of this huge wick rejection that we have here. We also have a huge bullish engulfing candle. We also have bullish engulfing. We also have bullish candles here. Another wick rejection here. So this is a high liquidity zone here, and I expected price to come down to this level, which it eventually did. Formed a pin bar, formed another bullish candle, and we might see price continue to shoot upwards. If we bring out our Fibonacci, we can see that price came deep in down to the 78.6 level, and now we might see price shooting upwards to 33,000. We might see price coming to find resistance at 33,000. At 33,000 here. We might come to 33,000 where we'll find resistance and begin another retracement to continue going upwards. Let us see how the price develops. So US30 might continue to go upwards, and our target is 33,000. Let's go down to the dollar. For the dollar, as you can see, the previous week I was expecting the dollar to find support from here, from this bullish candle here, but eventually we broke our previous higher low here. After breaking our previous higher low, we made a new lower low, then came up to make a new lower high here. As you can see, I had this level marked out where I was expecting price to find resistance. So it found resistance, created a bearish pin bar, and from there we made this bearish leg, showing to us that we are currently in a bearish trend. So price has now begun to retrace, and we might see price continue to come down from this level. We might see price finding resistance at least this level and continue its bearish leg because of this demand area. Because of this demand area here, we have some demand here, so we might see price continue to decline from here. I'll give you an update in the Telegram channel. So I am expecting bearish movement from the dollar, meaning on the pairs that we trade, we have bullish momentum. For those that need more insightful information, you can subscribe to our Telegram channel, where I will be posting an update for how price is moving on the different pairs. Thank you very much for watching the video this far. If you have gained any knowledge, any insightful knowledge, please don't forget to like, subscribe, and share the video with your friends. It really means a lot to us if you share the video and more of your friends get to gain more knowledge about the Forex market and how the Forex market works. Make sure to always trade smart and keep your risk low to a point where you can tolerate a loss. I'll see you in the next video.